Can you also show the media agenda? Start recording. All right. Did you click the screen?
I'm
Start
sorry.
recording?
Yes.
Did you start?
Yes.
Okay, sorry. Well, welcome to Virtual Investment Club of Sacramento. Good evening, everybody, including our guests. We have about 6 guests right now, and we probably will see more later on, because we have today have quite a few guests have registered to our meeting. Better investing, no, let's start with a disclaimer. Better Investing is a nonprofit educational organization that teaches individuals and investment clubs how to employ fundamental analysis to become successful long-term investors. Our club is a stock investment club. Our mission is to provide a supportive environment for all members to learn how to research, analyze, and invest in quality growth stocks over a long-term investment horizon. The stocks we presented today are for education purpose only and are not intended to be a recommendation for buying or selling any of the stocks. We ask you to do your own research. At the end of the meeting, we will ask our guests for your comments and questions. So enjoy the meeting. All right, next item on the meeting is the treasurer's report. I will give to Roy, make Roy a presenter to see Roy's screen. Go ahead, Roy.
Okay, do you see my screen now?
Yes. Yes.
All right. Everyone, what we do is we track our portfolio using Morningstar's portfolio program. And we're the VICS club portfolio. And these are the stocks that we theoretically have bought. What we do is we pretend we buy these stocks each month for $1,000 total, which is unlike normal investment clubs where everyone donates money, and then you that pool you decide how much of that you can spend. We've just set $1,000 because it's easier to track. If all our stocks are 1,000, you can see some have grown quite a bit and some have shrank a little bit. But this is the tracking, and now we're going to go to a view. And we started buying these in last May, 2016. And we've done it almost every month. There's been a couple of months where we didn't like the stocks, but anyway, that's when we bought these stocks here, and you can see how well they've done. We've had IPGP since August, and it's gone up a tremendous amount. Skyworks has gone up very well, as BIVV. CVS and Biogen have not, but I believe that whole industry is down, so that's not too surprising. But here's our total, and our club, which is just barely a year old, and many of our stocks are only a few months old, we're already at pushing the 15% margin. So that's excellent. What I've also done is I use my iClub product for this, and you can see all our stocks here. And we can see a couple of programs. This shows you the diversity on size, small, mid, large, and mega stocks. And there's a nice color chart that breaks it down. And then we have, and also this broker, what that is cash. So it shows how cash is influencing our portfolio. Let me get back up here. We also can look at the sector and how it's broken down. by chart and also by graphs. And that looks pretty nice to me. It's nicely balanced. So um, we're doing well. Plus, in diversification, we're doing well. And so it looks very, very good. I wish I had bought all of these stocks. So that's the treasurer's report.
Okay, great. Thank you, Roy. So for our education topic, Roy, do you have any? I know you were at the Better Investing National Convention. Do you
Yes.
have anything to share with us? Just have a quick summary what you have learned at the BINC.
Well, yeah, there's a few things for those who don't know, and if you're new to Better Investing and the Stock Selection Guide, there is a beginner series that they run. There's 5 classes. They run the various aspects of, or they teach you the various aspects of the Stock Selection Guide. Then the other classes, some rated intermediate, some expert, um, some showing you how to build your portfolio for growth stock, but they also had some for income. A lot of us are older and we want a little bit of income as opposed to straight growth stock. And there was a couple on defense and offense and what that means. Um, One that was interesting was like the pilots, they have checklists before they take off and also after they land. And it was recommended that we have a checklist. Make sure you run through everything before you spend your money investing in stock, because something may look good, but when you go through your checklist, you may find some flaws that'll make you reconsider, or at least cause you to research it a little bit deeper. Um, then we had presentations from several companies. Some of these return every time. There's usually a water company. Duke Energy was there. General Mills is always there, and they bring Cheerios and some other products, which are always fun. And there's REITs, and you can dig into those and see if it's worthwhile for your portfolio. And we had a financial company there in Cincinnati, which is where Bink was. And then what was really interesting this time, and I watched both of these programs, there was an agent from the SEC to explain Edgar, which is the term they use for the stock filings, or the filings that corporations have to make, and how to search the SEC website for that. And then we had 2 speakers from FINRA, from the Investor Education Foundation, one to talk about how your emotional biases will affect your decision making and how to try to overcome or reduce the impact. And also the president of it, um, Jerry Walsh, was a speaker for the main presentation one morning after breakfast. Talked about smart investors and dangers, and answered a lot of questions and answers about that. And on that, she will be speaking in August at the Money Show in San Francisco. Her title is How Women Outshine Men at Investing, Family, and Unity. But I'm going to try to get down there and watch it. Um, and Doug Gerlach will be speaking there, as well as Dennis Gennard from Better Investing. And then I just wanted to throw out tomorrow, I think it's Wednesday, at 5:30 California time, is a BI presentation on what's new on online tools, both core SSG and SSG Plus. So look for that. If you're not already a member, go on the Better Investing website. You should be able to find a link to sign up for it. But you can see all the new tools, all the various tweaks that they've made to the online tools, make it a much better product than it was, say, 5 years ago. I mean, they've
Is
been
that
making
this?
progress, and this is
Is
the
that
last one.
is that this week?
Yes, this Wednesday,
Okay,
the 21st.
thank you.
Okay, great, Roy. So where is next year's bank?
Next year's bank is in Orlando. It'll be May 18th to the 21st. And you can go on the BI website to get more information and to sign up for it.
Okay, great. I think Henny is really looking forward to attending Bank. Henny is in Russia, Moscow today, and
Oh, wow.
he told me that he wants to attend, but if he has jellies, he's wide awake, he will be on. Apparently, he's in sleep. And yeah. So, all right. Thank you, Roy, for sharing the information or the things you have learned about at the bank. So next month, education topic supposedly be Henny, but he will be in Greece for family vacation. He won't bring his laptop. So we need to think about a topic to talk about for next month education topic. I'm going to take this offline. We can discuss later on what will be.
Okay.
So next item on the agenda is stock studies. I'm going to show the screen, and I also want to open a mic for Bernard Scoville. And so I'm going to kick off with introduction about the industry we're studying for this month is internet. So Roy showed us the club portfolio, and we know that these sectors currently are not in our club portfolio. So we kind of briefly try to find something that something that we don't have. But at the end, we have a couple folks that on the stock study committee, they are relatively new to BI. So I don't want to add a lot of, just be honest, I just don't want to kind of stress them out. I just want them to, oh, sorry, now you can see my screen. You can see my screen. So these are the sectors that are not in our current portfolio. And we also, in our club, we don't take any contribution, but we ask guests who, if they have any interest to join us, they need to observe our 2 consecutive meetings and participate 1 stock studies. That's why this time we have one guest, Bernard Scoville, will present a stock tonight and pair with our member Barry. I facilitate the stock studies. I want to talk about why we decided to pick internet. So we briefly look at the things that these sectors, because they are relatively new, they decided to present something that they felt very good about. The Google and the Facebook, they both are quality growth companies, even though in our portfolio, technology is kind of already have almost 29% in our portfolio, but they are still going to present Google. But we don't have internet industry, but in technology sector, we already have about 29%. So we will let them to show us what they say about these 2 companies. I'm going to start with internet industry. What does Violin say about internet industry? So Violin overall still very optimistic about this internet prospects for the long haul, and they still believe that it has very attractive growth potential. For the industry fundamentals, in particular, I'll make it a little bigger so you can see. They mentioned Alphabet, Google as benefiting from growth in mobile search. And also it mentioned Facebook as well in their industry write-up. So they also believe that Facebook continues to gain from strong growth in monthly active users and mobile monthly active users as well. And this month I attended both Google, Alphabet, and the Facebook annual meeting. I have learned a few things. I posted my observations in our club Facebook page. Virtual Investment Club of Sacramento. If you're interested, you can read about my observations. So I'm going to the bottom, the conclusion is that does the internet industry still have health growth in revenue and earnings in the next decade, as Viola suggested? So I'm going to let Barry start talking about Google, so see what she thinks the why Google, start with why she thinks Google is a quality and growth company. Okay, Barry?
Hello, everybody. So Google does an incredible amount. It's now called Alphabet. Google split in 2014, and it now has its Google division and its Alphabet division, and the Google division is part of the Alphabet now. So and when I was looking at all the information and everything it does, it's absolutely amazing. So the Google division takes care of Chrome, Maps, YouTube, and Cloud, and the Alphabet division takes care of Google and Google X, Verily, which is the life sciences research, Nest, which is a lot of their Google Home, also Loon, which sends balloons out into the atmosphere and carries the hardware and the software for further reach for mobile services to people who are further away from cities and would normally have less access to internet capabilities. So those are just a few of the things that Google does. So it's quite an incredible company, and the reach is amazing of what they do, not to mention the Android and Waymo for the self-driving cars, and also the gaming platforms that they have. So when researching Google, it has good management and solid historical sales growth with a year-over-year of 22.5%. The EPS growth of that is actually incorrect on that number there. It's 17%. There we go. And then the pre-tax profit margin was 17.7%. The ROE was 14.5%, and the debt, it carries a very low debt of 4.5%. Also has a cash flow of 7 billion, was one of the figures that I saw. So that's why I picked Google. And then the company makes money by selling advertising on the internet. Recently, the majority of the growth is coming from smartphone users and advertisers, as well as YouTube users and video advertisements on YouTube. They've seen a big shift to people using their phones to do mobile searches, and then they use those to go into any ads that may be popping up and look at different products that are of interest to them. So that's the primary way that it makes money. They also make money with their Google Play, their hardware and cloud, in which they sell apps and hardware like Pixel, the Pixel phone, which I have and I love, it's great. Google Home and Google Wi-Fi. I'll get in a little bit more to the advertising for YouTube in a little bit. It has a projected growth rate sales of 15%.
Okay, I'm going to bring the SSG stock selection guy. Let me make sure I refreshed it. Okay, sorry, I thought I did, but did not refresh today's data. Okay, go ahead.
Okay, so it has historical sales. I did a projected growth rate of 15%, and I picked this using the 5 analyst projection from tools on the Better Investing research section. And then future growth, where will future growth come from? It will come from increasing current advertising spending from current advertisers companies, and then also from new advertisers spending money there. Let's see. They also it'll come from Play, hardware, and cloud. Google has also a huge interest in machine learning and artificial intelligence. So the machine learning is where the machines are learning to focus in on what people are interested in, and so they are able to better target. I'm sure as you guys have gone on the internet and you see that you're maybe searching for something, then it starts to figure out what you're looking for, and it can show you items that you're more interested in. So they've been really spending a lot of their money looking into the artificial intelligence. And then also they're going into the hardware as far as the Pixel, the Google Home, and the Wi-Fi, bringing together the best of Google across hardware and software. Then they're also developing in March, they just introduced the first developer preview of Android O, which is the Android mobile operating system, featuring new battery life, notifications, and picture-in-picture displays. They have their new phone that's out, and they also have wearables that are going to be working with Fossil and Tag. Not only that, they're also increasing their Android services through India and Brazil and throughout the world. The other thing was, let's see, not only are their existing advertising choosing to spend more, but there are many more businesses around the world that are just getting started on their ad platforms, like I mentioned, India and Brazil. And it's, again, the shift to mobile, which is huge. And then what I was talking about earlier with YouTube and their advertising, they've started doing bumper ads and true view skippable ads, and they've kind of combined those together. And they found that when they did that, the viewers would, they would pique the viewers' interest more, and they're more likely to click on that ad when they showed the two ads together versus just the one ad.
What is bumper ad?
A bumper ad is a 6-second like little snippet video that is shown really just in 6 seconds. So they have to get their message across really quick. The true view is a skippable ad, so you could skip it in a certain period of time, but it could be a longer ad than just 6 seconds. So Google also acquired DoubleClick in 2008, which helps develop and service advertising platforms, which makes it easier for them to effectively reach the right audiences, them meaning advertisers. So they've bought that company to help their people who are advertising with them be more successful. So that's where they're coming. That's where they're going to be making their money in the future. And then I'm going to go to the projected growth rate for earnings per share. I put 13%, and I use the preferred procedure growth rate projection.
13% or 13.5? It's very minor.
13.5%.
Okay.
I use the 2017 Q1 data for the pre-tax profit and tax rate in the preferred procedure growth rate projection.
Okay.
And it projected a high PE of 29, and I chose a conservative high PE from the last 5 years on the SSG. And a projected low PE of 22, and I also use the past 5 years of the SSG. And a projected low price of $662.4. And it was calculated using the low price on the SSG formula. Right there. And at the current price, I recommended a hold. And the upside down ratio is 2.1 to 1, and the projected compound rate of return is 10.7%. And I recommend that we follow the,
Add it to the watch list, you mean?
yes.
Okay.
Barry, I have a question.
Mhm.
For your high price, you used, I can't really see the screen, 29 for your average
sorry.
high PE?
Yes.
Okay, and then, so why didn't you use the 31.6?
I was trying to be conservative. Because we also have a couple 30s in there.
Yeah, okay,
And then I crossed out the 23.9, so
okay,
kind of on the conservative side.
okay.
Any other questions? Tom, Roy, Jane?
Oh, looks good. Good study.
Okay.
Oh, none for me.
None for
Okay.
me.
Okay. Matt's also traveling. He tried to attend, but apparently he's not making it. All right. So no more questions. Do you guys want to see the quarterly data?
Yes, yes, please.
Pretty consistent.
Mhm.
Turning up. Yeah. Okay. So no questions. Okay, let's go to Facebook. Bernard? Can you start with tell us why you think of Facebook is a high quality growth company? Bernard?
Okay. Hello, can you
Yes.
hear me?
Hello.
Yes, we can hear you.
Oh, because I never turned the mic on. I don't know.
Okay.
Well, Facebook is a leading social networking company, being better than a lot of others like Twitter. Sales and earnings have gone up year after year. The 5-year growth is 52%. Historical 5-year earnings per share growth is 248%. The pre-tax profit growth and earnings growth have paralleled sales growth. Historical 5-year profit margin is 32% profit margin. That's good. Historical 5-year return on equity is 10.8%. Debt has been reduced to zero. Although on the balance sheet, I show a little bit of debt, but almost zero. Briefly describe how the company makes money. I'll quote from Value Line. Facebook operates the world's leading social networking service through its flagship website. The company's web-based tools allow users to connect and communicate with each other. They had about 1.86 billion monthly active users December 31 of 2016. So 1.86 billion monthly users. Generate substantially all revenue from selling advertising. That's where they get their money. 4 products provide provincial advertising revenue: Facebook, Instagram, Messenger, and Oculus. Ads can be in a variety of formats: text, photographs, images, videos, any way you want to advertise. Marketers can place their ads on many factors. So you can target your ads at certain ages, certain gender, certain location, certain interest, certain behaviors. A fellow inline skating instructor a few years ago told me that Facebook ads gave her the cheapest and the best results, that she's advertising for people that might be interested in skating. And with Facebook, she could hit the nail on the head. From Facebook Investor Relations, I learned that Facebook has 9 data centers. In a television program, Hello World, I learned that Facebook has one of the largest and most efficient data centers in the world in Luleå, Sweden. The data, and they in the television program, they showed the data center. Man, it was incredibly large, as far as you could see, banks of computers. But the data center was over 300,000. This is just one of 9, over 300,000 square feet. And the weather in Sweden is cold. So not much air conditioning is needed to keep the computers cold. And the electricity is very cheap because of the Lula River has 15 power stations. So these efficient power, computer centers, this helps Facebook operate at a high 32% margin because their data storage and stuff is redundant but cheap. Okay, now the projected growth rate for sales is 24%. And why did I select? Well, when we looked at all the projections by analysts for sales growth, most of analysts picked 25%. And Reuters, I think it was, picked 33%. But I picked 24% to try to be a little bit conservative.
I want to stop for a second. When Henny reviewed the first cut, he made a comment. He's saying that, what did he say? Good rule of thumb is that never to estimate sales or earning per share growth more than 20%. It's very difficult for a company to add all the necessary structure to grow by 24%. So are you okay with to change the projection sales from 24 to 20%?
No, I think 23% maybe, but we did a lot of research before picking this, and Facebook has a lot of products that they are just starting to monetize. I think we don't know the future. That's a Achilles heel of this. 5 years out, we really don't know. But I think I would not. I think if you go down to 20% for this company, you're being too conservative. I'd stick with 24.
Well, do you want to see? Okay. So shall we see if we project 20%, what does that give us? If we say 20% still can give the return we wanted, and that's great, so you may perform even better than we expected. That's awesome. But even though I agree with you that other analysts gave different higher, sales forecasts, but ultimately is we need to make a judgment call, a conservative judgment call, since we have now owned this company. I know you have, Bernard. We talk about this. You have a large shares of Facebook. You really have a confidence in this company.
It's one of my larger holdings. Yeah.
Right. So Tom, Jane, and Joanne, Roy, what do you guys think?
I think, I don't think we should necessarily use 20 as some sort of a cutoff. I think that's pretty arbitrary. And historical is over 50%.
Yeah.
So I don't have any problem with going like 23 or 24% in the future. That's half of the historical.
Last quarter was 45%.
Yeah, I agree with Tom. Normally, you do 20% growth, and of course that sales, it's based on earnings for getting your price, and the 30 earnings per or a PE of high PE of 30, 1.5 times the 20. But this company's rather unusual. It has huge margins, and so I would be willing to do this with keeping an eye on it, and maybe in 3 years really focusing on, do we want to keep it at such a level? I mean, I know when we do annual reviews, we should do that, but I just because those numbers are so high, Bernard gave us half of the average growth, so I'm okay with that.
Okay, 24. All right, carry on, Bernard. Any others?
Okay.
Jane or Joanne, do you guys have any comments?
I also
Right?
agree with Roy and Tom. I
Okay.
think 20% is too arbitrary.
Okay. All right.
But
Carry
I
on,
do have a
Bernard.
concern about what Hanny was saying about the structure. I wasn't clear about what he was referring to when he said the structure supporting 24% growth. What does that mean?
Well, I think I don't know about structure, but as this company gets larger, it gets harder and harder to grow.
Okay.
I mean, but I don't know for sure.
Okay.
Okay.
That's a question for Hanny.
Yeah. All right. So majority are okay with 24. Okay. Historical earning. Oh, sorry. Historical projection for earning per share EPS.
Okay, now, and we come up with 15%. Now, here's one point where, Jay, you had to help me because we used
Right.
the default preferred procedure, and I
Yes.
haven't mastered that preferred procedure yet.
Okay.
So I was going to go like 20% or something because sales are kind of paralleling. I mean, earnings are kind of paralleling
Okay.
sales, but we use preferred method and we come up with 15%.
Right. So I believe the big thing that we may change with taxes. If you look at the taxes, as you can see that, oh man, that's the taxes. Okay, 2016. Okay, 2012 they went IPO, and then drop in half 2013, 14, 15, and then in 2016 it dropped significantly. 2017 as well. So there are a couple reasons of the tax rate why it's low, and we decided to use. I thought we were going to use a 16.5. I don't remember what you said in first. I will take a look for a second. So Bernard, can you explain to us one of the reasons why the tax has dropped? Mark
Yes,
Zuckerberg explained.
I looked it up on the internet, and a
Mm.
speech Zuckerberg gave, he indicated that the taxes are coming down because more and more of their business is overseas where there's lower tax rates.
Yeah. I think this is one of the reasons. Another reason it was because I learned about from the last Ticker Talker about the stock compensation. So the stock-based compensation, actually, there is also have a tax effectiveness as well. For 2016, actually the example, Facebook was one of the examples in that TikTok. The tax rate impact was 7%. The stock compensation they gave, how many, 9 million or something? I can't remember exactly. I think it's 9 million to their employees for reward. So they gave a lot of, it matters. Stock-based compensation matters. That somehow impacted their tax rate as well. So that could be another reason that is another reason that the tax rate got lower. I learned this was new. That's why Henny was asking you another question, say, Facebook pays a lot of in-share-based compensation. We should look at how that has been changed over past 5 years. What percentage of earnings is being paid out in shared-based compensation, and what impact will have on earning per share. So actually, it does have an impact on earning per share as well. I think on the earning per share was about 9%, I believe. Anybody attended the TikTok this week? I think the example was showing here 2016 is 3.49. I believe it was supposed to be 3.0 something. I can't remember exactly. So it does have some sort of impact. So the presenter was suggesting that when we look at the earning per share growth, we probably want to temper this number a little bit. But regardless, overall, the growth is about 100%, right? Anyway, so that is the tax rate we want to change. So I'm going to change this to 16.5 using 2017 Q1 data. This is one change. Go ahead.
And Jay, can you check the pre-tax profit, the one that's right above it?
Yeah. Pre-tax profit.
No. Okay, so go back to your preferred method.
Oh, okay, got it.
And see that. So you picked 32.8, but 2016 was 45.3, and it looks like it's going up to 45. 0.8.
Yeah,
Shouldn't we
it
raise
does.
that?
Well, this is a 5 years average, right? But you look at 45.8 and 45, so it's about average 32 point something. Maybe a little bit higher, I would
Shouldn't it
say.
be higher? I think they're
Okay.
including that 9.7.
Yeah. So what should we give?
I would,
35?
yeah, I would give it a little higher than, because
So 5 years average. Oh yeah, because this 9.7 is outlier, right?
yeah,
So, well, the first quarter 2017 is about 45.8. So very close to 2016. I don't know.
How about,
Anyone's
yeah, I think 35 or 36 maybe.
okay. I give 35. The tax and they don't pay diluted share remains the same. They don't pay dividends anything. That share remains the same. Okay, let's see. So that will give, using preferred procedure, that will give us 17% earning per share.
okay,
Okay.
okay.
Okay. Carry on, Bernard.
Okay, so let's see, we're on a what, projected high PE, or where we, wait,
Okay. Now we go to high. Now we go to high,
Okay.
project high PE.
Yeah, well,
All right.
I think that would probably be okay.
Yeah, well, I think we went 38 because of all the ones in the history, that was the most reasonable.
Mm.
And same thing with low PE, of all the ones that we have in history, that was 25 was a 25.6 the most reasonable. And so those are what we picked for PEs. The projected low price, 102.7, and that's low PE times low earnings, $4.01. That would give us $102 projected low price, 102.7. And this company comes out of buy, at least when we did it the other day.
Right. So yes, it is a buy. Actually, this price is a Friday price. As we know that tech companies, that price was slighted because of was JP Morgan or some report was saying the technology company stocks are overpriced, but Facebook today, the market opened, the technology companies stocks went up.
Yeah.
Actually, Facebook today is 152.
Yes.
Yeah, it's 152.
$152, 152.80, almost
Yeah.
153.
Yeah. I don't know why the price still is showing 16, but anyway, the market is supposed to showing June.
It's because Star hasn't updated their feed yet.
Okay.
It probably
But
in another hour you'll get the correct information.
But for Hecko, you have June 19th. I saw that later on your quarter right
I changed that.
okay,
I went from Yahoo, got the current price,
okay.
went into data and changed the price to today's date.
Okay, I see.
You can do that.
Okay.
But
So
here's I have two concerns about the high price.
Okay, go ahead.
First of all, I'm very reluctant to go above a 30 high PE. I mean, but I'm willing to do that with this company because the numbers have been so high. But if you look at the high PE, column D, it's been going down. It went from 90 to 70, back up to 80, but down to 38. So it's falling. I would say maybe 35 if you're going to exceed the 30. But to just pick the last slot and say, oh, well, it's, the best out of the four. Well, what it shows is it's been dropping.
Yeah,
And
that's a good point. Yeah.
so I would drop it to 34, 35.
Okay. 34, 35. That's fine.
So, something like that.
Okay. All right. What about the low PE?
That's fine. I'm okay with that.
Okay.
Because low PE is handled a little differently.
Yeah. Okay. Anything else? Any other comments?
How was the low price is 102? Okay.
Yeah, 102. Okay. Carry on about the return, compound return.
Okay. Now,
Upside
I'm
down
still,
ratio.
um, well, okay. Well, so I don't know if my figures are update. Well, let me look at what you have. But it's 11% by using the average PE and 15% by using the high PE annual return. Does
Yes.
that still hold? Yeah. And the
Right.
3.1 to 1 upside downside.
Right.
3.1. Yeah.
Yes.
So,
Okay.
so it's a buy. And
Yeah.
if you want, I can read some more here. I can talk some more about explanation and stuff like that.
I think we probably got it.
Yeah. Let's take a look at quarter data. What's going on in 2015? Earning per share. Facebook did a lot of acquisition as well. Oh, a lot of it. Yeah, a few. Yeah, go ahead, Tom. You want to say something?
There was one year where they had earnings, 2012, of like a penny.
Mm.
And I'm wondering if that the jump between a penny and 60 cents from 12 to 13 is showing that big increase in percentage.
Yes. But my question is from 14 to 15, significant, drop. Any idea what happened there? 2014. Well, my impression at the annual meeting, I have to say, well, I did not own Facebook before, and I looked Facebook a couple of times last year, but did not buy until I went to the annual meeting, and after I talked to Bernard, did the stock studies. I kind of have some confidence in this company, in Mark Zuckerberg, and also looked at investor relations. They have a very young leadership team, and compared to other companies, it's a technology company. So I felt I have some confidence in this guy, Mark Zuckerberg. He finally graduated from Harvard, and he invented this Facebook thing, social media thing, and I also felt quite. They also in here provide some stats of the products they have right now: Facebook, WhatsApp, Messenger, and Instagram. There's one product that did not list here, which is the Oculus, which is a
VR, virtual
reality.
Virtual reality. I think, I don't know. Do you any idea that I know virtual reality is going to be a big thing in the next decade. So, but I don't know how it's going to grow.
Okay.
I don't know. Yeah, go ahead.
Okay, I went on the computer. I listened to Mark Zuckerberg give his annual report on earnings, and he explained that the way he builds, how he does it, and this would apply to Oculus. First, you build a community. You make the platform the best, the good, and then you let people start using the community. And then after that, you can sell advertising. So we might be looking 5 or 6 years before Oculus. But already 400,000 has come from Samsung. Samsung's is incorporating this Oculus into some of their products. Now, another thing, we should mention this, what Eric Sprague told us from Seeking Alpha. He pointed out the operating margins are improving even more than sales. So they're becoming even more profitable as we go forward, at least in terms of their operating margins. And I want to mention one more thing. I think what Jim Cramer pointed out one time is they have a real neat business model. the consumers provide the content, and then they use the content they advertise the content. All Facebook provides is a good platforms, and so if in the future people want to communicate and Facebook should still be there. Well, anyway, I'll go ahead.
Yeah. Personally, I favor Google but Google is based on the stock selection guide overpriced, right? If just for those two companies, what they do, Google does so many things, and I have so many Google products. I even have their virtual reality thing we bought. I have Google Home, but I think Facebook at some point they do something very similar. They will also have their virtual reality. They will also have artificial intelligence. They are both companies selling ads, right, to make money.
Yes.
So, yeah. So do you guys, any questions? Anyone wants to make a motion? Do we have a motion?
I think we go through everything, all our stocks before we make any motions to buy.
Okay. All right.
Okay,
So, okay.
should we do the
Do the quarter report. Joanne, I will make you a presenter.
okay.
Now, am I on the agenda?
Yes.
Yes, you are.
Oh, okay, I didn't see myself there. Okay.
Okay, so I am watching Five Below. They do sell their retail establishment, specialty retail, and they sell products to teens, tweens, kind of mid-adult, college-age students, products that are $5 and below. So they have areas like tech, room, style, candy, and they are trend aware, so that whenever there's a trend, they hop on it. At this last stockholders meeting, I don't know if any of you know about the thing called a fidget. I never saw one before, but I went to an Asian store down on Stockton Boulevard, and they had a ton of them. And there are these things that you spin around in your hand, and apparently it's a mad craze with kids. And they're about, I guess they can range from $5 to $25 if you get a fancy one that lights up. And so in their stockholders meeting conference call, they mentioned these, they call them spinners, the fidget spinners. They mentioned it 54 times because apparently their sales just went crazy based on this spinner. So apparently before they had had a similar success with silly bands. I don't know if you know what those are. Does anybody know what those are? They're like rubber bands in all different kinds of shapes. You can get them in animal shapes, star shapes, character shapes, and they were so inexpensive that kids would just collect them and have tons of them on their wrists, and that was a trend. What they say though is that with this fidgets particular, the latest trend is that it attracted more boys or the male customer into their store. So what they look at trends is appealing to audiences that might not ordinarily come into their store, and so introducing them to what their store provides. So they're also in a real growth mode right now. They just opened up stores in California, Southern California, and their strategy is to do cluster openings. So they'll open several stores in the same geographic area, the same city, or a region, and then do all their marketing and advertising in that region to show a real presence. So that's their strategy. And currently they have like over 500 stores, and they, according to their management, they expect to be able to support 2,000 stores. So they're really looking to expand in the future. Let's see. So I didn't change any of the growth estimates, still at 20%. EPS growth estimate 16.9. Let's see. I have some comments here. Let's one concern. Okay, so one thing I wanted to ask the group is that, okay, so the year-over-year sales growth is approximately 20%. Pre-tax profit around 21%. Year-over-year EPS growth 25% for the last quarter. Then when I get to the current PE, it's 38.3, and that's from the SSG. And then when I was looking up the definition of relative value, because I was really trying to figure out what does relative value mean? And when I looked up the definition on like Investopedia or some of the online financial resources, they define relative PE as the PE ratio of the company compared to its relative value compared to the industry of companies. So, but according to the online tool, the toolkit, they do relative value based average. The current PE ratio compared to the average of that single company. And I thought it made more sense to compare it to the industry versus itself. Does anybody have a comment on that?
Yeah, I do.
Okay.
And maybe it's because I've used Toolkit for a number of years. But what you want to do when you're looking at the relative value, you're looking to see whether it's overpriced. If let's say the relative, the PE is 20, but on the average, but it's 40 right now, that's a 200%. And that's going to be way, way high for that company. Now, different industries are going to have, a different PE for that industry, but within that industry, you might have some stocks higher or lower depending on how new they are, their product mix, and various things. So, yes, a lot of analysts look at the PE of this company versus the industry, but a lot of analysts, when you look at size, they go by the capitalization, where we look at sales.
Right. Okay.
And so it's just a different way of thinking. And when you're looking at it here, it's how does it compare with its average PE, and just to see if it's overpriced or not, or if it's overpriced, if it's just a little bit or way out of whack.
Okay.
So I think the toolkit way makes sense.
Okay, so I'll go ahead and let's see. Let me see if I have that. Still have that up? No, I don't have it. Okay, I'm going to go ahead and change that later then. Okay, let's see. So the risk reward is 1.7 to 1, and the compound total return is 9.5%. Since we try to go for a 15% return, and it looks like 5 is even though it is a growing company and they're putting a lot of money into doing their expansion, I'm not confident that they are going to. Well, right now it's not a good. For one thing, it's not a good time to buy more of the stock, more of this stock. But I'm not so sure. I'm confident that they're going to be reaching that 20% growth every year. So that's my evaluation. And then the relative value, even when you use the comparing it to its own, its average PE, the relative value is over 1.0. So I believe it's when it's over 1.0, then it's considered overvalued and not in the buy zone. Any questions?
So what was the last thing you said there? You said relative value?
Yeah, the relative value of the company when you use the PE ratio compared to its average PE is over 1.0. I think it's like 1.21.
I'm looking at it here. It looks,
Yeah, that's so I use the industry average. We just talked about using using the industry average PE, and Roy explained that it's probably more accurate to use the company's own average PE when you're evaluating whether.
yeah, I would tend to agree. I don't think it hurts to look at the industry, but you know, especially something like Facebook, you know, it's grown so fast that it would kind of be an outlier as far as its PE.
So, and also just as an FYI, you know how it says relative PE on the top of the value line? They're using the industry average. I don't know if anybody ever looks at that.
Oh, right, yeah.
At the very top of the value line, printout.
So we have owned this company for about a year, right? So right now give us return at the what, 10% about?
Where is it?
10%, wait.
Oh, it's right here.
Oh,
about 6%, I guess.
6%. Okay. So you know how who was sending an email was Henny sent an email about the general store.
Yeah.
Maybe the next stock study group, they can see if they want to challenge 5 to replace with general store. Just then, I don't know if a general store is a buy, but
I think Dollar General.
Dollar General, yeah.
You know, and Matt and I did look at this, and we came up with at the time those dollar stores weren't in the buy range. That's how we came up with. I think it was Tesco, and I can't remember, or the Tractor.
Yeah,
the Tractor one, and I can't remember what the other stock was that we looked at. The specialty retail didn't seem like it was a. I think at this point, I mean, we're not losing money on it. And they're and just recently the price started going up. So I don't think we're really pressed on selling this. If there is an opportunity for specialty, if somebody is doing the stock study and they find some good companies, in specialty retail, I would encourage them to pursue that. But I wouldn't tell them you have to do specialty retail to counter to challenge 5. If they can find something a lot better, then I would encourage them to look at those.
Okay. Sounds good. Thank you, Joanne.
Okay.
Anything else? Any questions for Joanne before I'm going to let Roy present HECO? Roy, I'll make you a presenter to show us HECO.
And I
go ahead.
Get Heiko if he needs it.
Oh. Roy is muted.
Oh, he is?
I don't know if he's aware.
Oh, okay, I sure am. Sorry. Okay, I'm back.
Okay. So you are the presenter.
I took the gag off.
Okay.
So let me see here.
What's going on with HECO?
Okay. Since this is a quarterly report, I'm going to turn to that first. And as you can see, wait a minute, get down here. The earnings per share was 16 5.2%, which is, you know, not bad. It's worse though than last quarter. What concerned me was this 5% growth in sales, which is the lowest in quite a while. And
So what happened?
I'm getting there. So
Okay.
I researched that and listened to the conference call. So let's go ahead and go to the written report. Joanne, can you bring that up?
No,
Or?
it's yours. It's your screen. Just go to Window.
Okay.
Next to Help. Yeah. Your second one. Oh wait, no. Portfolio Manager. Yeah, Portfolio Manager, man. Sorry. Portfolio Manager. Yeah.
Oh, no, that's the.
I know, but it's on your third tab, I believe. Oh, it's the fourth tab. Fourth tab. Yeah. Okay.
Oh, there we go. Okay.
Yeah.
So you can see the 5%, and then the pre-tax profit was about 15, and earnings growth was about 16. And the 16th beats our projection, but of course the sales is half of that. The current PE is 36. The average is 28, so it's a little heavy. It's 130% relative value. We're going to turn back to the SSG again to show why I got the 0.5 to 1 upside down or risk reward ratio with a 2.2 annual return. But what they showed was the reason they first claimed for the reduction in sales is the new aircraft usually has a window of the first 5 years where they need very little maintenance and repairs. And then the analysts brought up, well, manufacturing has slowed down, which I've seen with Air Lease. That's been the problem with Air Lease. So then they shifted and they said, well, we had a really good year in 2016, so by comparison, it's down. But we're at an all-time high, which is true. Let me go back to the SSG. Now you can see this is up straight and parallel. The average growth has been 12%, all the way to 14% on pre-tax profit, earnings at 17. But you can see this past quarter. I was using because the projected earnings is 12. I would normally go to like 18, but as you can see, and which we have with a number of our stocks, we have pretty high PEs. So I went up to 30. I really hate to go above 30. And with the average of 33, it's not that much, below. As you can see, I adjusted it for today's price. I used 25, which is a little higher than the average low. PE. So that may be actually a little rich, but using these newer numbers, though, I get a 1.5 to 1 upside down ratio with a 6% rate of return.
So Roy,
now this is a stock. I mean, it looks good. The price keeps going up. And we're making money. The market likes it, and it's one of these that I would use the offensive tools to see if it's sort of run out of gas and if there's a competitor better. I didn't look at any competitors. I figured the stock study committee can do that, but what I wanted to do was present a new SSG so they could use that to look at it, because I don't like to sell anything. And I'm not really recommending a sell. I'm recommending that we consider a sell. But you know, this is one of those companies that what I would do is, especially if we had, you know, real money, I would sell it now, watch it, and on a price dip, buy it back. One of the things that you can see is in the 2016, the sales were, you know, pretty good. They've been growing each quarter, and so the company's right that they're at an all-time high. But you know, if we go by the growth rate is a bit of a concern. But it's good. You know, it is a growing company, and if manufacturing of airplanes takes off again, or if the existing airplanes out there start needing more maintenance, this company should, you know, perform well. It's just this spot in time, it looked a little rich. So Joanne, you had a question?
Oh, I wanted to know how you adjusted the price.
Oh, okay. Went up to data, company basic data.
Okay.
And you see price and the date. So
okay.
I changed that. I put today's date in.
Okay. Very good. Thank you.
And then I did the update study. Okay. You can also do that for the data. If we have, let's say our meeting was 2 days after the company reported their earnings, and that's too soon for Morningstar to act and give a better investing new data. So you can go in the same way, in quarterly data, you can update the study, you know, put in the newer numbers and click that, and then you'll get the latest information on your graphs.
Okay, thank you.
So what's the final recommendation for this company, Roy?
Well, I guess it's a hold, but with an eye at possibly selling. If anybody else is concerned about it, I think it's pretty rich, but you know, like I said, if the airplanes out there start needing more repairs or just maintenance, then the company should do well. So I'm kind of iffy on it. I on one hand and then the other, you know.
Okay.
That's the danger with having an attorney doing this.
Yeah, right. All right. So any questions for Roy? Okay. So Tom.
As you can see by this graph, you know, the earnings and sales, you know, have a nice trend to them.
Mm-hmm. Right.
But the price is also up. So I wouldn't sell it because I'm fearful of it. I would possibly sell it if we thought it ran out of gas and there was something better on the horizon.
Okay. All right. Okay, Tom, last one. But Tom, do you want to show your screen?
Well, I guess I could, or somebody else could show it.
Okay,
it doesn't
I'll have
matter.
It. Okay.
So you want to put it up?
Yes, I will make myself presenter.
Okay.
There you go. Go ahead.
Okay. So I didn't do a very good job on this report. I want to apologize to the group here. I did this report a couple weeks ago, and then I looked at it again today, and I think I got the PE wrong. Well, first of all, this company is kind of difficult because it just started trading on its own in February. So you really can't do a stock selection guide because there isn't any data. And they did give some historical data, but I think that's kind of shaky because they just sort of made it up, you know, like it wasn't really actual company performance. It's their own internal things. And so they had these slides at the or the conference call, but it seemed to me like they were being inconsistent as far as, you know, how they were doing employee compensation and things like that. So I didn't have a lot of confidence in their earnings, but, you know, I thought we could look at the sales growth. And so the sales growth, their guidance for this year is 17 to 19%. That's up at the top. Go back up to the top. There you go. So their sales growth is 17 to 19%. So I was thinking we could, you know, use that sort of as a guideline. But the year over year, the quarterly sales growth is 35%. So they have been growing, definitely growing. But as far as, you know, pre-tax profit and earnings, I couldn't, you know, we don't really have reliable data. Now, when I got to PE, I looked at put it into Toolkit and it came up 89. So every other stock, I just go with what Toolkit says. But this one, they're only doing, apparently they're only using that 1 quarter's worth of data and then comparing that to the price, or 1 quarter's worth of earnings. So that gives the numbers way off. So you know, looking at the price is around 60 today, and analysts are estimating 273 for this year. So that would bring the PE down to about 22, which so I think that's more reasonable than this 89, which you know, is a mistake. And we can't really look at you know, relative value because we don't have historical data. The share price has gone up significantly. I think it was trading in somewhere like in the low to mid 40s when it was spun off, and now it's gone up to 60. So the market is liking it. They have 2 products on the market. They've got their 2 hemophilia drugs, and they were the first to market on these longer acting hemophilia drugs because, you know, that people need to give these really often. They're proteins that are eliminated by the body, and like, you know, every 2 to 3 days. And so now there's, you know, some of theirs maybe last closer to a week. And so they got on the market first with those, so they were taking share from other companies, but now other companies are bringing out competing products. So they don't you know, have that, well, they had the first mover advantage, but other people are getting similar things on the market soon. They acquired another company called True North. It has a promising drug for something called cold agglutinin disease, which, you know, and the Morningstar thought that might have maybe like potential for 500 million in sales once it gets going, and they gave it a 60% chance of success. You know, they've got a little bit of stuff in the pipeline, but they are facing some significant competition. There's a Roche and another company called Alnylam, are both working on products which could be on the market in 2019 that will approach this hemophilia problem in a different mechanism, and those may last up to a month. So this, and also have the advantage of being given subcutaneously rather than intravenously, like these factors that the BIVV is selling. So, you know, they're facing significant competition, but they're growing fast at this point, and both Morningstar and Argus are giving them a hold at this point. One positive factor is one of their directors runs a hedge fund, and he just invested $50 million in the stock, which is a pretty significant investment. So that's a positive factor. He apparently likes it, and his hedge fund focuses on early stage pharma companies, biotechs.
Okay.
So I think I'm going to recommend a hold at this point. I might be interested in buying it, closer to 50. But the price is a little high, and they're from what I read, they're going to be facing more competition in the future.
Okay, thank you.
Yeah, Tom, I was wondering because this is only 1% of our holdings, and they say that anything under 5 isn't worth holding. It takes too much time to evaluate it. Now, the numbers, like you said, are difficult at best because it's so new. But what is your best guess based on what you've researched? Do you think in a year or two it's going to be doing quite well, or do you think the competition is going to batter it down?
It's with any of these pharma companies, nothing's guaranteed. These drugs that are supposed to come in the market in 2019 may crap out, and you don't have, and the competition may go away. I don't know. I don't know what to think. I wouldn't buy it myself today. I realize it's just a small holding. We could, I think it's certainly growing faster than Biogen, which was the company it was spun off from. And it may have more potential, but just it's really hard to say. But I do agree with you. It's such a small percentage of our portfolio. It's hard to justify spending a lot of time on it.
Yeah, I can remember in the 90s I had PepsiCo, and they spun off what at that time was called Tricon Global. It's now Yum Brands, Pizza Hut and KFC and that. But it for the first few years it outperformed Pepsi quite a bit. I'm just wondering if this spinoff is going to outperform, and even though it seems highly priced, will it turn out to actually look small? Like I didn't get into Facebook because I thought it was highly priced. Well, it showed me to be a dunce. So I'm just wondering, if we should consider buying this, or if you really think we ought to hold off, see if it drops a little.
Well, I think my recommendation is, maybe, wait another quarter or two and see what happens. I don't mind devoting the time to it.
Okay.
All right. Thank you. Okay. So do we have a motion? We have a Google, Facebook, 5, Echo, and 5. Yes, Joanne.
Oh, I just also wanted to say that, is it called, what is that company called? BioRiv? What's it called?
BioVerativ.
BioVerativ is 60 today.
Yes.
Stock price.
Okay.
Yeah,
okay.
So it's even gotten higher than when within that month that he evaluated it.
Yeah.
Well, this right. Well, this 89 is way off, but the PE is around 22 today. If you figure the projected earnings and the price, because it's projected to earn like 273 this year, and that's for 11 months rather than 12.
We can add that to our watch list.
Okay.
Yeah. Okay. So is there a motion?
Yeah, I would like to buy some Facebook.
Yeah, I would like to buy Facebook. Second,
open discussion. No discussion? Okay, start vote. Go to your email and go to your email. Look for the one that's stock voting ballot. Uh-oh, everybody's looking at my screen. How I vote.
Yeah.
So
Here, I'll put it on. I'll change to.
So
okay.
The motion is buy 1,000 of Facebook, and then we do yes or no, right?
Okay, yes. Sorry, I need to be specific. Yes, the motion is to buy $1,000 of Facebook. Yes or no, abstain. So Joy, I'll make you a presenter.
Okay, I'm going to put
Okay.
the,
Go
Okay,
ahead.
wait, I'm still trying to find there it is, stock voting ballot. And
Yeah.
you want us to vote on this, huh?
Yes. Yes.
Oh, okay, you click that, now it comes up.
Yeah.
Boy, I hate Google Drive, but okay.
You don't go to Google Drive. You go to your email.
Email.
No,
Google Drive won't work.
no, it brings it up in Google Drive.
What?
Oh, mine brought mine up in a browser.
You click and then it comes up again.
You click and say submit.
In order, you go to vote, it brings it up again in Google Drive, and then you vote and submit. It's a weird way of handling it, in my opinion, but that's how it works. So you should have my vote.
Well, mine came up in Firefox.
Yeah.
yeah, you could do it in any browser.
You just do it. I just do it in the email. Okay. Can we see the cast vote?
But when you submit it, it brings it up in Google Forms.
Oh, yeah, it does. Yep.
Let's see.
Okay.
Let me see where.
Yeah. Stock studies.
You put it.
Oh,
in, you put
no,
it
it's
there.
yeah. One above stock studies.
Oh, one
Stock
above. Oh, you didn't put
Yes.
it because
No, I just we don't need to have. We just need a one overall. Stock voting ballot. That one. Yeah. Okay. 5 results. Do we have a 5 today?
Yeah.
Somebody didn't
No,
vote.
me. I can't get my out of my screen is locked. I can't get to my
Okay.
voting.
So.
I don't know why.
Oh, okay. That's all right. So
It's 100% anyway.
it's 100%. So we'll buy $1,000 of Facebook at tomorrow open price, the market open price.
Yep.
Roy, please.
Yep.
Okay, thank
Will
you.
do.
Okay, so next thing on the agenda, we don't have any new business, so we're going to discuss uninvested the cash we talked about last time. We are going to buy some ETFs. I'm also suggest by REITs since we don't have any accounting tax implication. So, but we're going to wait until Henny present us the ETF for the next future education topics that we will decide.
And that's just to park it, right? That's just to
that's a pocket.
Cash.
Yes.
It's not to keep it there, and nobody has to follow it or.
Right. Yeah. Just a pocket. Yep. Okay. And so now I'm going to open the floor for our guests. So we have a distinguished guest tonight. We have our betting investing CEO, Cami, attend our meeting. I'm going to open mic for her to let her speak first. Hi, Cami.
Hello. Hi, everyone. I just wanted to say I was really delighted to attend your club meeting this evening. I was very impressed with the level of knowledge and expertise that you all shared with everyone. So it was very educational and also a very well-run meeting.
Oh, thank you.
Yes, no, really, just I was very impressed with the whole thing and was just delighted to have this chance to sit in and listen to all of you discuss these stocks. I thought it was some very good discussion.
Great, thank you. I'm glad to have you tonight. I know you have been very busy. I'm so glad that you are able to make it to our meeting tonight. We appreciate your support, Cami. You can visit us anytime.
Okay.
All right. Thank you. Okay, next I'm just go through the list. Bernard, you are the next. You are our guest, but you participated the stock study tonight. Thank you for your job. Well done. And first of all, I will see if you still have any questions, comments for us.
Well, I'm hoping that I can join.
Okay, so then, my next question was going to ask you, are you interested in joining us? I guess your answer is yes. Okay, so we will vote you in at the end of a meeting, and I will let you know. I will email you the results. Okay, Bernard? Thank
All right.
you. So, all right, I will go to next is Cheryl. Cheryl, I will unmute you. Oh, I think I unmute. Oh, she's self-muted. Cheryl, you need to unmute yourself. I'm going to go Diane first. Diane, you are on. Your mic is open. You can speak. Diane? She's not talking. Oh, she may be just away.
Has she left?
No, she has not. She may be just away. Dawn. Actually, they all muted themselves. Dawn?
Thanks.
Oh, Diane. Do you have any questions or comments? Okay. So I'm going through the list next. It will be Kay. I'm going to unmute you. Kay Light. Hi, Kay.
Hi.
Hi. You actually ask questions. Why chose internet and not one of sectors missing from portfolio? Oh, at the beginning, I briefly talked about we actually tried the first thing for me, because each person have different style of doing stock studies, and then we usually we do top down. We always looked what we have, what we don't. We start with the sectors that missing in our portfolio. So we did go through using better investing quality screening tool to see if there are any of the companies that fall under our missing portfolio. So we really didn't see anything strong stand out. And I mentioned that Barry and Bernard, they are, well, Bernard is a lifetime member, but he belongs to AI organization, and then Barry is a little relatively new. So we want them to feel comfortable to present something that they feel comfortable with at this round. Of course, you know, they are still learning, and we still help them and to, you know, master how to do research studies, all that. So that was the reason why that we chose. They feel comfortable with Google and Facebook, so we chose to internet industry, not the one. Does that answer your question? Okay.
Yes, it does. Thank
Okay.
you.
Sure. Do you have any other comments?
I don't know.
Okay, great. Marie Frank.
Yes, hello. Thank you for letting me attend.
Oh, yeah, you're welcome. Glad that you can join us, attend. Do you have any questions or comments?
On the Facebook, I felt like that was maybe being I haven't been able to buy it myself because it's never in the buy range when it started making money, and I just thought that some of the projections were a little bit aggressive. And I noticed when you did the preferred procedure, when I looked at all the adjustments look good until we got to the shares going forward, because they do the stock-based compensation, and it looked like every year it was increasing, and I didn't see an increase in that. So that, you know, that's just one of the things. And I'm a life member of BI, but I'm still struggling a little bit with the online tools.
Yes. So I'm just looking at Facebook one more time based on what you just said. Okay. So you were saying, sorry, I was trying to bring up the tool. Which part you were saying that? You were saying that
where you weren't. I didn't notice a provision for the increased shares annually.
Click on the, or yeah, that one.
Share outstanding?
Yeah.
Diluted share.
Diluted share outstanding.
Okay, maybe. Okay, I guess I didn't see that it had been accounted for.
Yeah,
okay.
They bumped it up.
Okay.
I'm using the Q1 2017 data.
Yeah.
Yeah.
You guys have stronger stomachs than I have.
Yeah. So yeah, I've been debating about Facebook. I looked at my oldest stock studies and how I project the Facebook I was passing by until this time. And I mentioned I attended their annual meeting and then heard what Mark Zuckerberg said about the company in the future. And I actually bought it last week when there was dip at the 146 something. So I gave it a try. Okay.
I was surprised just because you said that you favored Google.
I do favor Google. I own Google. I favor Google because I feel like my life, Google has in so many ways. I mentioned I have a Google Home. I have a virtual reality. I have a artificial intelligence. I hope that someday Wi-Fi can be free because they have this loom, which they send a balloon, the Wi-Fi to the atmosphere, helping Peru, helping some countries that they don't have infrastructure for internet. So even in United States, in some rural areas that they may not have internet, they set up this balloon. I hope that someday we will see balloon in the sky and we all get free Wi-Fi's.
Well, the other thing, I think they could do augmented reality because they also have their fingers in the pot in some of the life sciences stuff.
Yes, life science.
I think that's one of the things that that will drive growth down the road too for them too.
Artificial intelligence, which in the future, actually, Eric Schmidt talked about in annual meeting. So in the future, if dermatologists, let's say, diagnose your skin cancer, they are not using doctor, they are using machine to tell you.
Cell phone app.
Right, give you much accurate, results, tell you, oh, you do have a cancer, skin cancer, something like that. So I have to say, and the cloud is another area that they are so our club, we're using cloud, we're using a Google Drive, which is a cloud-based file sharing system. I know Roy made a comment, he doesn't like it, but we loved it. I loved it. So anyway, so I do favor Google, I have to say, but Facebook is just different dynamics. They do social media. I'm not crazy about, even though, but they I have to say, you look in their stats, you cannot argue how many active users they have, right? So as they brought up at the how many users they have. Actually, 85% of the users are outside of United States and Canada. So
yeah, I've resisted them, and that's another reason.
Yeah.
Well, thanks again.
Okay, you're welcome. All right, so Mary, you are the next person in line. Do you have any questions or comments? Mary? Lord. Oh, okay, I will go. Next one is Rosanna. Roseanne? Sorry, I say your name wrong.
That's okay. No, thank you.
Oh, you don't have any comments? Okay.
No.
Okay. All right, Cheryl. Cheryl still muted herself. Okay. So, did I ask Diane? Did Diane say anything? I can't remember. Don is muted himself. Okay. Well, thank you so much, everyone. And we appreciate that you take your time to attend our meetings. And we meet every third Monday of each month, except Monday. If you have a Facebook, you can find us. We post Facebook under our chapter Facebook page, Sacramento area chapter, or Virtual Investment Club of Sacramento. We will make announcements when the next stock study is, education topic, so that sometimes we post some good articles or information about investments. So I hope you enjoy our meeting and hope to see you in our future meetings as well.
Thank you, everyone.
Thank you.